An economist believes it is high time the government reintroduce fuel subsidies for the bottom 40% and middle 40% households. Alliance Bank's Manokaran Motain says targeted subsidies have been a discussion theme for a long time, but it can be much easier to implement now. That's because the government would have the necessary funds to engineer a mechanism to facilitate targeted fuel subsidy now that it has implemented the GST. Manokaran thinks that the government should give back a little bit more after earning over 42 billion ringgit from the consumption tax this year. As of September 2017, transportation costs due to high fuel prices took up the biggest chunk of Malaysia's consumer price index at 15.8%. In fact, the higher fuel costs have also been blamed for the lack of interest in some affordable housing projects. According to Radar Chairman Jeffrey Ng, buyers just aren't interested in affordable houses that either lack integration with public transportation infrastructure or are too far away from the city centre because of the high cost of commuting. Economists are expecting Bank Negara to hike interest rates next year as the country's economic growth gains momentum. The central bank decided to keep the OPR rate unchanged today. However, it also said that the Monetary Policy Committee may consider reviewing the current degree of monetary accommodation. Barclays senior economist Rahul Bajoria told Bloomberg he has a rate hike penciled in for the first quarter of 2018. Meanwhile, RHB said in a note this evening that it's expecting the central bank to hike the OPR to 3.25% next year. Bloomberg points out that Bank Negara is expected to be the first among Southeast Asian policymakers to make a move in the face of higher US borrowing costs. But he believes the central bank may hold off from raising the OPR just yet, with the general election looming overhead. S P Setia's net profit surged 88.9% in its third quarter ended September this year. Earnings stood at 253.2 million ringgit, up from 134.1 million in 2016. However, revenue shrank 33.3% to 842.5 million ringgit due to lower overall recognition from its Malaysian operations, with more projects handed over in the previous quarter. The group clocked in 2.82 billion in sales for the 9 months ended September this year, with 59% coming from local projects. While total sales came in within expectations, its chief and president Koh Chap Jen says the local market remains subdued and the underlying demand is only strong for selected products and locations. This is mitigated by stronger demand for its international projects, with the 9-month sales exceeding the previous fiscal year's total sales. Koh adds that with a stronger contribution from its international projects, it remains positive on achieving the sales target of 4 billion ringgit for 2017. Petronas Chemicals' earnings increased 2.47% in the third quarter ended September this year, thanks to improving crude oil price and higher production volume following the commissioning of Samo plant in May. Net profit was at 913 million ringgit versus last year's 891 million. Revenue was higher as well, climbing 12.6% to 4 billion ringgit from 3.6 billion. This was despite undertaking heavy statutory turnaround activities at its MTBE plant in Kuantan, Pahang and its ammonia and derivatives plants in Kerteh, Terengganu. Its Group MD Sazali Hamzah says the improving trend of crude oil prices has lent support to the petrochemical market in the region, leading to more demand and favourable product prices. He adds that the delivery of Samor and other upcoming growth projects in Gebeng and Pengerang will ensure its continuous growth. Petchem will have one final statutory turnaround at its methanol facility in Labuan before the year ends. Based on current market conditions, Petchem believes it is well positioned to deliver a good set of results for FY17. PM Najib says the digital free trade zone is expected to double the export growth of SME products and goods to $38 billion by 2025. The first phase of the DFTZ on November 3rd already saw almost 2,000 entrepreneurs rope in, surpassing the target of 1,500. And Najib is expecting that figure to continue to increase, taking into account the huge opportunities that entrepreneurs could potentially gain as they are able to market and export their products and services through the DFTZ e-commerce platform. In 2016, the digital economy contributed about 18% to Malaysia's GDP. The contribution is expected to go beyond 20% by 2020.